talk about the similarities of
Hey, do you follow GameStop at all?
Tesla and AMC.
Yeah, a little bit.
Okay.
The stock price. I haven't been trading it just because I didn't think that it would be a very good trade for because it completed a cycle so much faster than AMC that it needed a major correction, if that makes sense. Because it had so much intense buying pressure, and then everything kind of diluted when the whole short squeeze hunt happened. Is my consensus. And that's why we haven't seen that massive upside yet. But I think deep fucking values got a point. That thing's got to go up eventually.
Yeah, yeah. Okay, I was just thinking about a title. So I'm just going to call it JP Merks and Jackson Hunter Talk AMC.
Oh, we could talk whatever you want. I've been charting GameStop.
For sure, for sure. All right, we're going to go live right now.
Oh, that's sweet. It even warns me that you went live on Zoom.
There we go, guys. We are now live. My name is Jackson Hunter. I got JP Merks with me. We'll give you guys a couple minutes to shuttle in here, and then we're going to talk AMC, the movement. JP's specialty, I believe, is technical analysis. So we're going to get into that, and we're going to go over the earnings call, of course. Let me post this to Twitter so we can get some more people in here. And then we'll put JP's YouTube channel in my description below. Yes, I am a synthetic version of Jackson Hunter. Uh, the real one has a beard, and the synthetic one doesn't.
All right. So let me see what my
I got JP Merks with me. We'll give you guys a couple minutes.
let me see what my. All right, that looks sweet, man. I'll be very bad at like changing anything, so I'm very bad with the OBS system as a whole, but I got my graph up, I got you in there, my graph, my charts.
Hell yeah, dude. No, OBS is it can be confusing at first.
There's so many layers.
I still barely know how to use it. All right, guys, if you're just hopping in here, I'm just putting JP's link at the bottom. So subscribe to JP Merks' YouTube channel. The guy is awesome, dude. I wouldn't be messing with him if he wasn't. And he's got some wonderful things to share with us right now. So subscribe to JP Merks, and we'll kick this thing off in the next minute or two. And he's also live on his channel if you guys are watching me on mine. So you can watch it on either one.
Yeah, you're kind of like a whale, so I think anyone who follows me at all will automatically be subscribed to you. But in case you're not, Jackson's just the realist. I mean, across all his videos, that's the my favorite part. If whether it's his music or his actual AMC or GameStop content, he just speaks from the heart.
Thank you so much, brother. I appreciate that.
Yeah, man.
All right, cool. Where the F did the beard go? Man, I shaved it. I shaved. What happened to your hair? Oh, Jamie from Trade Spotting's in here.
Yo, Jamie's coming on my space call tomorrow off of your recommendation.
Oh, dude, Jamie is the best.
I
Uh,
know.
Man, Jill, what's going on? Appreciate you, Jill. We got Carrie, JT Trades, Mark, Renee Bogart. Yeah, what a day. Exactly. The earnings call was amazing. We'll go over that in a second. But the focus is on JP. He's the main man tonight. I want to shine some light on this dude. He's awesome. Another West Coast, East Coast battle going on. And should be an awesome live stream. Cameron Mearsa, what's going on, guys? The beard is in the trash, man. The beard is gone, but it grows back pretty quick.
I'm,
Nice. We got about 150 people in here. Please hit the like button. Please subscribe if you haven't already, and subscribe to JP Merk's YouTube channel. JP, you ready to kick things off?
yeah, man. Whenever you're ready.
Okay, cool. So, guys, welcome. My name is Jackson Hunter. You guys know me by now. I cover AMC, I cover GME. I've been doing it since the end of February. Today was the earnings call for quarter two of AMC. It was extremely bullish. Whichever way you slice it, it was just bullish. And we'll talk about that in a second. But my main man tonight is JP Merks. He's got his own YouTube channel. Subscribe to his channel in the description below. He deserves a lot more followers than he has, and I know he's going to grow. He's going to have an awesome future. And JP, would you be so kind as to introduce yourself to the people?
Sure, sure, sure. So I first off, definitely thank you so much for that. I probably would have maybe a little more following if I knew how to edit or any of that fun stuff where it's kind of coming at me as it goes. But yeah, essentially, I went to college, played lacrosse for a year down in Florida. I lost my scholarship almost immediately. It was academic, and I just didn't go to class. There was like this constant struggle of the beach and class, so I readdressed my focuses, and I kind of realized if I was going to go to college, I needed to major in something that I liked, which happened to be philosophy. So I graduated with a bachelor's in philosophy a few years later from a non-Florida school which did not have a beach. And then in lieu of law school, when COVID hit, I was accepted into law school and I decided against it because I kind of got addicted to trading. And what I found was the analytical reasoning skills that I picked up during my philosophy major actually played pretty well to my strengths in trading. And on top of that, I was always a little bit less emotional when it came to things. So it worked out pretty well. After about a year of struggling, I started to have some pretty great successes, and then AMC hit, which was if you traded options, it was pretty incredible that run there to say the very least. I was like, wow, that was quite the turnaround in my life. And then, the huge crash. So I lost some of that, of course. And then since then, we've just been grinding back up. And I realized after I actually quit my job that I was bored. So I decided I kind of wanted to get into the spotlight to kind of share what I've learned with everybody and hopefully help someone else along the way. Um, so yeah, so it's been about a 3-year journey in trading, and here we are.
Wow, that's insane. You would have thought that you've been doing this for like 20 years, man. The technical expertise that you have.
Yeah, so I definitely was in the stock market since about 2010, um, and that was just good fortune. My dad always taught me, hey, compounding interest, just take your money and put it away. So he set up a Roth for me way back in the day, um, and as a philosophy major, your job potential isn't that great, unless you go to law school or something. So the Roth is wonderful while I was working. I was always under the cap for income. And if anyone doesn't know, a Roth IRA is a type of savings account that essentially is tax free. You can only put 6,000 in a year, but you'll never pay capital gains on anything in it. So that's pretty cool. You can't take it out till you're 60 though.
Okay, cool. I know exactly what you're talking about. I was a music major as well, and nobody cares if you manage your business. So, yeah, my journey was the same but different. We both wanted to find a way to buy us time to do what we really like in our off hours, right? Like I'm sure trading is not your number one passion in life, right? It's a means to an end to achieve more time, right?
Absolutely. I mean, there's definitely those days, you get the manic high from having like a wonderful trading day, or even worse, the manic lows. But as you trade long enough, you kind of get numb to that. Is what I would describe it as. Like
Yeah.
a big swing in your account, you're like, well, that sucks. And the first time it happens, you're like, ah, my heart, my soul. So no, yeah, I definitely agree. I actually would go one step further. I'm a little cynical. I see the world as a kind of a massive hierarchy. in which the top just controls everyone below them, uh, and they use tactics like bipartisan system to kind of divide the bottom. Like everyone kind of, for the most part, unless you're a shitty person, just wants the best for everyone else, right? And that's kind of my take, is that that whole 40-hour a week job is a hierarchical trap.
Yeah.
You're not making enough, at least I wasn't making enough money to break out of that trap anytime soon. So I kind of needed a backup plan. So I gave myself 2 years. I said, hey, look, you've been trading for about a year. You kind of suck. Like I pretty much sucked at the start. And I have a very competitive personality. So I never paper traded. I just like kind of threw money at stuff until I figured it out. And then after about a year of that, I was like, well, that was not a good tactic. So I have talks with myself a lot, kind of like a crazy person, um, and I'll kind of address the bigger picture, which is life and where I want to be. So I was looking at where I was. I was working 60 hours a week, 2 jobs, plus trading anytime I could, making just dumb trades because I didn't have time. Right, I wasn't really sitting home charting. Not, I was working 7 days a week, and kind of just throwing everything I made into the market for the market makers to just grab. So I decided to quit my second job and I took 2 days a week to just trade. And I told myself, you have 1 year. If you don't make money in this year, you're going to law school. You're taking out a loan and you're going to law school because at the end of the day, I was never going to be super content with the job I had or the job opportunities that would have stemmed from there. And that's the beauty of college and the higher education degrees, which I never got. Right, I got my bachelor's in something um, not so smart. If you're looking for a great job, go into engineering or coding or developing, whatever. Don't go into philosophy. Um, so yeah, I told myself, hey, I got a year to learn how to trade. If you learn how to trade in this year, you don't have to go to law school. But if you do, if you or if you learn how to trade this year, you don't have to go to law school. But if you don't know how to trade by the end of the year and you lose money 2 years in a row, it's over, right? Like cut your losses, go to law school. So then I got really competitive. Fix the volume on my stream. Can't hear Jackson. Oh shit! Sorry guys.
It's okay. I'm not that important, man.
Oh, you're so important, man. I gotta fix this real quick. I only have like probably a fraction of what you have, but so I'm assuming they can hear you. I just gotta turn you up. Check. Sound is way screwy. Jackson's way low. All right, Jackson, can you talk real quick?
Yeah, for sure, man. This is me speaking.
I think that's as good as we're gonna get it for now, guys. Head over to Jackson's stream if you can't hear him. It's much higher quality, much more well run. But yeah, back to all that. So gave myself a year, and I got really manically obsessed. I read everything, everything free. I never paid for anything. I tried every different type of technical analysis. I learned about fundamentals, about market structure, and essentially, I realized that trading is just two theses. It's the flow. It's the battle of the bulls and the bears. Someone
Yeah.
might buy at a support, someone might buy at a trend line, or someone might sell at a support or resistance or sell at a trend line, or it might be a technical chart pattern or Elliott wave theory. Whatever it is, that's simply just a trading thesis, right? And what I found was when you see multiple trading theses line up with each other, that becomes a very good point to go long if it's a bunch of bullish trading thesis all coming into the same spot and a bunch of bearish. So I started trading both ways rather than just buying long, and I got really good at shorting stocks, specifically through the option chain. And I credit that largely to how much money I lost going long in stocks. You kind of realize what the other guys are doing. You're like, hey, I don't like that. So what I realized was most of the time in the market, it's a seller's game when it comes to options. For anyone who doesn't know, I almost exclusively trade options, and then I hold about 90% of my equity in stock. So about 10% I play with in options just because if I go any more than that, I'm prone to big losses. I have a huge problem with that. My convictions are too strong. So I'll get, these crazy wins, but, occasionally I'll have a bad loss. And if you're trading with 100% of your count, that bad loss, it's not good. That brick by brick strategy is the way to go.
Yeah.
So yeah, by losing so much to the market makers, the hedge funds, and the shorts, I kind of learned how to trade short side of things, and then I developed kind of my own trading style. I'm a volatility trader, so essentially, I look for changes in the implied volatility on the options chain. So this means I'm scalping stuff for the most part. I'm not holding things for most of the day. I trade most of the time from 9:30 Eastern time in the morning when the market opens to about 11:30, and then I usually go to the gym. Rather, I used to before Twitter and all this kind of became a central point of things. And then I come back at the end of the day, I check my stocks and I check my charts again, and then I look to enter an overnight swing. The reason I do this is that pairs very well with how the market makers and theta gangs sell options. So in the morning, essentially, there's going to be, if the stock gaps up, and that's what I'm looking for, is usually a gap up. There's going to be a profit taking wave and then a bull trap where people buy the dip too soon. And like I label this in an Elliott wave theory structure as an ABC correction. So if we gap up, there's going to be an A down and then a bull trap, which is, a little bit of a retracement of A. We can go into that. I'm sure that's not the direction of this talk. We're just going to talk big picture. So another time, but and then another push down would be C. And that's kind of where I look to enter is that third push down, and then I scalp a call, right? Or a put if it's the other way. And as it starts to rise back up, it's a pretty consistent trade. That's my bread and butter for making money. Um, I mean, just the other day, I had 1,000% Amazon call I scalped in the morning. It's like, these things that it's crazy. So what I found was I needed a rule system to kind of focus myself in because it dealt with my vices, which is like overconfidence. I like to trade too much, and I'm risky. So I created a lot of rules for risk aversion, and then I created rules around how I trade. So essentially, every trade I take, I have a predetermined amount of money I'll spend on it. I enter it incrementally in like 3 or 4 buys, and I very rarely average down. And the reason for this is just that's how I've lost so much money is by averaging down on things, thinking they'll work. So I'm kind of quick to the trigger on everything now, but I created a rule system which lets runners run. And my main goal is always to get something on the house. So if I buy 10 contracts and it goes up 50%, you can guarantee I'm selling 6 of them, keeping a little bit of profit, putting 4 just aside, letting them do their thing. Uh, if they start to lose too much money, I'll sell them, but that's profit, right? I'm completely on the house. Um, and that's just simple things I've learned. But yeah, to stem into the bigger macro, what I realized was essentially the entire market is driven by options when it comes to any stock that has an option chain.
Mhm.
Um, and now this is obviously an assumption, and this is my thesis. But if you remember, AMC, when we ran to 70, we actually saw the market makers added that $70 strike. We hit 77 in after hours, and then we never touched 70 again. The reason for this is that there was it was like 100,000 calls were sold at 70. So that's like times 100. So, it's like almost a
10
million.
million.
Yeah, 10, something like that. I can't do math that's that big. It's it was almost impossible to break through that wall. It creates a sell wall. And to put this into, easier perspective to think about, they just did the same thing with stock Hood. I got a lot of shit for shorting Hood, like so much shit. And I kind of laugh about it because I made a stupid amount of money, and I put it all back into AMC. But at the end of the day, I realized that it's not something I should laugh about. It's something I should explain, right? No, Hood did the same thing. The market makers, they added an option chain, and the highest strike on it was a $70 call. The stock was at 88 that morning, and it immediately tanked. The next 2 days, it was down to 40, 45 or 48, where I profit took on that. But essentially, that's the same logic. It's that the option chain itself will drive the stock price. And it's even more magnified from what I see when you look at stocks like AMC and GameStop, because it's absurd how much money is made in the options market.
Yeah.
Um, and when I think into this bigger picture, who's making that money? It's theta gang for the most part. People who are selling calls and selling puts. Um, and those are generally large institutions or hedge funds or, Citadel. Citadel owns the majority of the entire options market. One sec. Uh, so, yeah, essentially they're making a lot of money shorting stocks and then going long is what I've been noticing. So, uh, contrary to most people's belief, I think Citadel will make a lot of money off of this push up. I think that they own an absurd amount of the entire options market. It's a self-regulating entity, right? Their whole options team, and they can own their own portfolio. So not only do they know all of the data, right? Because it's Citadel, they can also create their own portfolio and then use shady methods like OTC trading or whatever to kind of benefit their derivative market. So they're getting that riskless principal trade from everybody because Citadel is such a large entity. And then they're also making money in the derivatives market with their own portfolio. And if I'm not mistaken, they own over 30% of the entire options market. So so my thesis on AMC essentially is that we'll see perpetual gamma squeezes. And the reason I say this is that's kind of how I was able to stop working was Tesla. I noticed this pattern a while back on Tesla, and it's the same situation that's necessary. Is found in AMC. I'll go over that in a second. But Tesla, if you're not familiar, Tesla squeezed from 40 to 900 in just under a year.
Yeah.
So right, that's quite a big gain. And that wasn't just the bulls going long. No, that was mostly shorts getting trapped, a perpetual gamma squeeze. And I'm going to delve into that situation real quick. Essentially, the only reason that that could happen is that we had millennials like myself who just loved Tesla, right? We love
Yeah.
Elon Musk, we love Tesla. We're not selling, we're buying, and we're holding this stock. And at the same time, you get the older generation, not to call them boomers, but that seems to be the go-to, who just fundamental traders who just hated Tesla, right? It should not have been trading that high, according to the earnings and blah blah blah. But it was because of the Tesla goons, the
Supply and demand.
Tesla apes, right? So, what does this situation entail? It entails a group of perma bulls who will always buy the stock and perma bears who are always going to short it.
Yeah.
So, as an entity with a lot of money, what you can do is you can switch sides very easily. And that's the flow. So, essentially, in AMC, what we're seeing is there's the apes, right, who just buy and hold this shit. It's beautiful. I love it. I'm an ape. Check my Roth. It's beautiful. Um, and you get the perma bears who fundamental traders who just hate AMC, right? And they're always going to short it. It's that same situation. So what happens is when you see large institutions switch from short to long, the stock will gamma squeeze higher. And the reason for this is because it just got crushed. It got oversold from 77 down to 28. Um, and as it did this, the implied volatility on the calls, which let's simplify it. The pricing on the calls was too low, the entire option chain. So as the stock started to go too far down, it creates the perfect entry for large institutions to switch long. So they shorted with the bulls, the bears, from 77 all the way down to 31. Then we saw a nice push back up to 45, and then we saw another push down. This is the flow, right? Like there's more selling than buying. I don't really like to get into the how. I just like the why because I really like money, and if I can figure out the why they're doing things, what I've found is I can trade around it. So why are they doing this? They're doing it to force the stock into a spring, if that makes sense. The entire option chain, the calls, there's no more call skew, right? There's the call premium is dirt cheap, um, and that's based on the implied volatility in the Greeks. So as the stock gets driven down, what I'm looking for is essentially large institutions switching long and switching from selling. Might be a little confusing. Switching from selling calls and buying puts to buying calls and selling puts. So switching from bearish trades in the derivative chain to bullish trades. And we've been seeing that. Unusual Whales and I and Jackson, we all have a pretty funny relationship, but essentially Unusual Whales is an ape at the end of the day. This man tweeted me a few times about the flow shifting because he does follow my stuff, and occasionally if I at him, he'll give me a little attention, which I love. But yeah, yeah, he essentially said it's the same situation as what we saw before our big run up, and that's my thesis, is that the implied volatility percentile, so the IV percentile and the relative strength of the stock are way too low on every single fractal, whether you're looking at a day chart, 4 hour, 2 hour, all the way down to like the 30-minute now, because we just had this bull rush. It is getting overbought on a very small fractal. We do need to cool off eventually, but that's far superseded by the larger picture.
Yeah.
So when I'm looking at this stock, essentially I have, uh, let me see if I could share this with you.
And just to interject real quick, I'm not a financial advisor. JP, to my knowledge, is not a financial advisor. This is not financial advice. And yeah, we did go from $77 to about $28. And that was largely short selling. And it was
100%.
largely allegedly naked short selling. And it was largely using synthetic shorts. And it was largely not letting the buying transactions be reflected on the share price because they were going through OTC and dark pool. So I hear you what you're talking about with the options, but it was also massive market manipulation to send the stock
Oh,
down.
oh yeah. So let me start
Right.
over. If there was a fair game, I wouldn't know how to make money. So I don't even think about the how. I just think about the why because it seems like they could do whatever the fuck they want.
Yeah,
Uh,
for sure.
right. So I leave the how to the geniuses like you and the other DD guys.
Oh no,
But
that's Houston Wade. That's Houston Wade.
whoever it is, I'll leave it to them. I just like to think about the why. Like, why would they do that? Well, they wouldn't do it forever. Every pattern changes. They're not going to get the stock back down to 10. More than likely, they closed those positions by now, and they reshorted, or they have made more money on the downside since the 77, where they took another short, that they could
Oh,
close those out.
you think
Um,
they closed out the shorts?
No, so I think it's in waves. I think that underlying there's always people shorting and there's always people going long. And if you look at what the actual bulls are and what the actual bears are, you'll see at the top of it, right, are the big hedge funds, and then the big institutions like the pension, whatever, and then like whales, and then kind of like the bigger momentum traders, the dolphins, and then it goes all the way down to like retail. Well, I can't imagine that they still have that $10 short position open because a they could buy a call on top of it for forever and have upside protection, or and b they just made about 1,000% on their investment over the past 2 months from shorting it if they were selling calls weekly, which they were. So those two things alone make me think that Citadel is not the institution that'll get caught. What I think gets caught are these small little hedge funds. Going back into the levels, everyone just wants to make money, and everyone's trading on a trading thesis, right? And that's all it is. It's a thesis. Some are right and some are wrong. And when we're wrong, we lose money, and when we're right, we make money. So yeah, I don't really get into the how, but I will say that this has acted a lot like Tesla, and I never considered it I always considered it a broken game. So I never even thought about it. I always just thought, hey, like they have all the power. These are like these massive entities. They're kind of like deities that can just force their will on anything. Um, and I kind of learned to trade around that. So again, I'll leave the how to everybody. They very, very, very well might have that $10 short position. And more than likely, we're going to squeeze a lot of hedge funds. But I actually think the opposite. I think Citadel will be the spear for us. I think Citadel will switch long and squeeze all the little fish below them because it makes most sense, right? It always, to me, it always just comes down to the numbers. If you're in a correction, you want to sell calls and buy puts and short the stock. That's how you make money. And if you're in a motive wave, you want to switch it. You want to sell puts, buy calls, and go long. And that's what we're seeing is these massive institutions are starting to switch long, starting to sell puts, right, and starting to buy calls. The reason for this is because the stock dropped so far so fast. The implied volatility is actually, or rather, the stock thinks it's going to go down, if that makes sense. It thinks it's going to continue to go down, so the put pricing is too high. So if you're selling something that's too high, right, you're getting a good deal for it. Similar to when the stock was at 77, the call pricing was just way too high. People were paying like 25-30% of the cost of the underlying for 100 shares to buy a call that expired in 4 days that was like 20% out of the money. So they were expecting like a 45% gain in 4 days to make money on that position, which stems into what everyone was saying. If you're buying those weeklies and you don't know what you're doing, you're just putting money into the market makers hedge funds pocket. So kind of back to my thesis real quick. So as the stock gets driven all the way down into this massive buyer zone, what ends up happening is it's oversold and the call pricing is dirt cheap. And the reason for that is that the gamma, which is the amount, the delta will change as the stock rises a dollar. The Jesus. Okay, sorry. So delta is the amount the option will change pricing for a $1 move in the stock, and then gamma is the amount that the delta will increase as the stock goes up another dollar. So if your underlying's at 100 and you buy a $105 call with a 0.3 delta, right? If the stock goes up to 101, that call will go up 30 cents, 0.3. Now, the gamma is what tells you how much the stock will go, or the option will go up the next dollar. So what a gamma squeeze is people who sell options, they have to have hedging for it. And when you're a massive entity, your hedging is actually not the same as you and I, Jackson. For you and I to sell a call, we're going to need 100 shares or the
Oh
cash
yeah, they
equivalent.
don't have to have the shares.
No, this stems into the fuckery, right? Uh, so essentially, they have to hedge, but they have to hedge in the direction of the stock. So if the stock's going down, they don't have to hedge equal. They have to hedge bearishly. And that would be the reverse gamma squeeze, right? This terrible correction that we saw, which it was it was shitty, right? Like I did not enjoy going from 31 to 45 back to 28. And I certainly didn't enjoy dropping 60s 3 times in a row. So essentially, though, what that did was it lowered the gamma to an absurdly low point. And as it did this, the stock price itself entered into buyers' numbers, right? We're hitting these major supports, we're filling gaps. It's entering the buyer side of the market with an arbitrage opportunity in the derivative chain. Now, AMC is the number one most traded option stock in, I think, the entire NASDAQ by a considerable amount. And that's because everybody likes money. And if someone traded options while we ran from 10 to 70, they made absurd money. And people are creatures of habit, right? They don't want to change their pattern. So they just kept doing the same thing and they just kept losing money, losing money, losing money. But as it does this, it's creating that spring. So the gamma's too low and the market makers are actually hedged short. So now, as the flow shifts, right, which we're seeing right now, we're seeing this big push up from 28 to 35.6. That's a huge swing. What that does
Just
is,
wait until we go to 100 grand.
right, wherever it goes. Um, so what that does is it pushes the stock gamma higher, 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 forcing the market makers to now hedge bullishly. So now all the entities just shorted with the perma bears. They created an arbitrage opportunity in the options chain and a perfect buying opportunity to go long. So now they're going to switch to the perma bulls or with the apes, and they're going to squeeze the bears. All the fundamental traders or any momentum trader who's slow to the trigger will essentially get squeezed as the stock gamma squeezes higher, because we're going to have another level of buying, which is the market makers themselves hedging for the gamma and delta relationship. Because all the calls that they sold to open will now need more shares collateral uh, to legally have them open. So yeah, so no idea about the $10 position. I apologize. That was completely assumptioned. It was my assumption because I don't think it's emotional. I don't think Citadel really cares about anything but money. In fact, I don't think. I think they think of retail as just a money bag, right? And that includes retailers who like to short stocks. Uh, so it's I don't think it's them, like permanently trying to drive this stock into the ground. I think it's them looking for the most profitable trade possible. And
Yeah.
if that's shorting with the bears, they're going to short. But what they did was they created the perfect opportunity to go long. And they did that same thing when we went from 25 or 27 down to 8, right? Where we took off again.
Mm-hmm.
They shorted the stock back down, and then the stock just started flying, right? And that was it. That happens to line up with the FTD cycles, and that's why I think it's intentional. If you give an entity all of this money to do whatever they want, you give them loose rules which can be interpreted, not subjectively, and on top of that, you give them a self-regulated options market, which they own all of. Why wouldn't they just kind of time their long position with the FTD cycle? So now they have like the perma bulls are buying, right? Because we're in the buyer side of the market. Fundamental traders or technical analysis traders who just like the stock at this level are buying. We had this amazing earnings report, so we're going to see more institutions start to switch long. And on top of that, a T2 plus a T35 cycle should hit tomorrow. So if I'm Citadel, right, I'm going to use the OTC when I want to let high frequency trading uh, destroy the price action. So essentially, what that means is they can kind of like turn it on or off how many trades go into the OCC, and high frequency traders will eat that up. So rather than being a 1 cent spread between the bid and the ask, it kind of comes out to like a 20. It doesn't have an effect on the stock price. So all that buying that we're seeing was just mitigated. And that's kind of the shadiness of the OTC, and why I think that's the biggest problem. But essentially, that creates the perfect opportunity for the next money move, right? So they just made over 100% on shorting the stock from 77 to 35 right now. And if you take into consideration what they made in the options market, it's absurd. So the problem with that, though, is they massively over leveraged the put side. So now they're selling puts, right, and they're selling calls. That's kind of what they do. Now that they made all of this money collecting all this call premium and just trashed the call price, there's all these puts that are sitting in the money, right? And they're not exercised yet. Like no one's exercised them. There's 260,000 puts on the maybe I'll check my number, but it's something around there on the 820 options chain. Um, and there's like 280,000 calls. A normal put to call ratio is 0.7, and I always look at the monthly option chain. So what that is to me is it's put froth. It's the put skew has too much money on the premiums. So an entity who sold those puts, right, is going to continue to sell puts but drive the stock price up. Now all of those puts will expire worthless. They'll do the same thing they did to the perma bulls to the perma bears, and that's the perpetual gamma squeeze. So we kind of find two main trend lines, which you kind of it shorts itself back down to, and then it just impulses off like a spring while they switch long. So my take on the price action is that yeah, it's absolutely unnatural, but that's how I learned how to trade. Everything's always been unnatural to me. Uh, it's always been they're the gods. I'm a tiny entity with nothing. Don't get in the way of the gods, right? Like that's kind of how I looked at it.
Until 4.1 million apes showed up and we buy on the dip and the lip.
Exactly.
And
Right.
I hear what you're saying, JP, but if Citadel covered their $10 shorts, we would not have gone to $77. We would have been in four figures by now. That's the magnitude of shorts that they had on AMC. And they've been long since at least March. They've had 780,000 shares of AMC. So they've been long. They're not switching right now. They're playing at both sides.
Yeah, they
But that,
always play, and they'll break down trades. So if they're short
yeah,
at 10, they'll buy like an $11 call, and then they own $11 up, right? So if there's any upside potential, they collect that.
yeah,
And I
but the
completely with you. If there's any naked shorting, and we already know, right? If you just do basic math, there's too many shares. But that's something that the SEC has to unveil. That's something I can't use in my trading thesis because essentially I don't know how that would affect things. I know that it would massively increase the stock price, but I also know that these entities have gotten away with everything for forever. So my hope is actually that we squeeze high enough that the SEC has to look into this shit. That the SEC will actually make changes that affect things.
oh,
Um,
the SEC knows what's going on. They know
oh,
way
100%.
more.
Oh
They
yeah.
know way more than I do. They know exactly what's going on. I can almost guarantee it. They know exactly how many naked shorts are on AMC. And when you're talking about Citadel generating liquidity from the calls and the puts, like, yeah, they're generating cash and liquidity, but that doesn't solve their short problem. They still have to close out those shorts. Unless a company goes bankrupt, you have to close out a short. And that means buying as many shares that you shorted, and they've shorted it the float multiple times over, likely. And then there's other hedge funds too. I know we always talk about the big C, but there's a bunch of other ones. So for them
Right.
to
So they can
close their
hide that
shorts,
though.
what's that?
They can hide that though. They can hide that for forever, and that's something that we probably won't ever actually know because they can always just buy a $10 call and completely cover the upside, or buy a $1 call and just exercise it, and then their short is closed. So if they shorted, say 10,000 shares at $10, they'd have to buy 1,000 calls. 100 times 1,000, 10,000. No, no, they'd have to. Yeah, we're not going to do math. It's late. I had a long day. They'd have to buy an equivalent number of contracts or find the actual shares, and that's the glitch, right? There's an infinite number of options, but a finite number of shares. So
Yeah,
that's
that's where they screwed up because the option writers never thought AMC was going to go that high.
exactly.
And so people like me that exercise their shares, I have the shares in my account, but they're IOUs because they never located them. And so eventually they have to locate those shares. And when they locate those shares, AMC is going to go to stupid high numbers. It doesn't matter if Citadel is making money or not. They still have to account for the shares that were synthetically created to suppress the price action.
Yeah, absolutely. Everything's on the tape unless it's a naked short, right? You're not going to put a naked short on the tape because you get fined by the SEC. But all the synthetic shorts are on the tape, is my read. And there's a lot, like a lot. So at that alone will definitely squeeze us up if we see any shift in the flow. So the flow again is just the bulls versus the bears on every level, and I'm already seeing a major shift. So that alone will drive the stock to 88 100 range. But what you're talking about is a forced recall of all these shares. That is absolutely the end game, the mother of all squeezes. That would put us to levels that we couldn't even imagine. That's outside of my wheelhouse, and that's something that I hope that happens, but I see that happening down the road. So realistically speaking, if there's no margin call and no covering at 77, I can assume that if we're below 77, it won't happen.
Yeah, but
Um,
if they let it go to January or February, the government is going to get half the money in taxes. There is no way the government is going to do that. The government
no,
wants as much tax money as possible.
right. So that's exactly into my cynicalism, my cynicism. It always comes down to the money. Everything in life, every single politician, I feel like has bought everything. Just it's just money. It's sick. But essentially, yeah, I think the same thing. I think that we'll see a big move before January, February, strictly because the government will want capital gains.
Oh yeah.
100%.
And
So
then if GME goes, AMC is going to go too. And you know, Ryan Cohen has something up his sleeve, man. Come on.
Ryan Cohen, man, he's the man. It just blew my mind, like what he did with Chewy, and then like his whole investment strategy. He's like, yeah, I just kind of bought Apple. I was like, what? He's like, yeah, I didn't really want to think about it. I love Apple. It's a great company. I was like, wow, you're just a gangster.
You
And then
know,
he just went on to do this beautiful thing with GameStop. Like he's a genius, truly.
You
He's
know, the
up
thing
there.
about him, I've only seen like a 2 minute clip on him, like an interview, but you know, you're a philosophy major, so you can break this down too. The guy just exudes confidence. Like
Hmm.
he will look at you straight in the eyes and tell you he's going to convert a company into the biggest company in the world, and you will believe it because that's how confident he is. And he's done it before. And dude, he hired like over a dozen people from Amazon to come over to GameStop. Bunch of people from Chewy came over to the GameStop. They have, if not one ace up their sleeve, they have two. But you want to talk about the earnings call real quick, JP?
Yeah, I'm sorry, man. I was rambling so long there. Let me finish real quick. So essentially, down the road, I see. Let's assume they didn't close those $10 shorts. What's the downside if they bought upside protection? That's the interest they pay on them. That interest gets higher as the stock price goes higher. So back to that 77 talk. I don't think that that would trigger anything because unless we're above 77, it didn't before. So my hope is that it perpetually gamma squeezes like Tesla, but it has a different factor. That different factor is the hypothetical, and I say hypothetical because I can't find anything that proves it. So and I'm just going off my hunch that Citadel themselves wouldn't have a $10 short. It would be other smaller hedge funds who didn't have the liquidity to get out of it without affecting the stock price.
Sure.
Um, so I definitely think that there's shorts taken at $10. In fact, I'm certain of it because I see different interest rates paid. But I don't think that it's Citadel. I think Citadel's infallible. I think that they're the monster that got too big. Unless the SEC makes massive changes, uh, I think we're kind of stuck with them. But that's my hope is that we squeeze higher, 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 and then the SEC has to make these changes because it comes down to the utilitarian aspect. There's more retail than there are apes. They're not going to do something specifically for the apes that would affect retail unless it's to the point where all of retail is like, what the fuck? Right. So if AMC squeezes so high that all of retail starts losing money in their stocks, the SEC starts to have to do something. If they don't, they can kind of dance around the bush. I'm a cynic. I'm sorry. Earnings call.
Interesting. Okay. See, I think the opposite. If they do something, that would be criminal. That would be unethical. And Gary Gensler said it in the last talk. They were talking about cryptocurrency, and then he said, "But what we're really focusing on right now is the GameStop saga." So that is what they're focusing on, and this is the biggest issue right now with retail traders. And
It's
it's
the
not just
loudest.
and it's yeah exactly but it's not just because only because I focus on it. It's the most blatant form of corruption in the stock market right now on AMC and GME, and there's about a couple other hundred heavily shorted stocks. But if when AMC flies, and by the way, an economic collapse could cause AMC and GME to squeeze too, which is imminent as well. So if AMC and GME go super high, and you're saying the SEC would have to step in. Well, I think the opposite. I think they would have to let it run its course.
Yeah,
Otherwise, they would further
exactly.
prove that they're not for the little guy, and we would just skip town like we're out.
No, I completely agree. I think we're saying the same thing. If it squeezes too high, then in hindsight, they'll have to dig in to change the rules to actually affect things so it doesn't happen again, right? Because I think we're on the same page. If we do see this mother of all squeezes triggered, there's going to be massive sell-offs in the whole market. And
Oh yeah.
it's just inevitable, right? Because these companies, they're not just short, right? They go long on other stocks.
I mean, look at what happened to gold on Sunday night.
I have no idea if that's correlated. Terrifies me though. I don't like seeing gold drop.
Yeah, I mean, I can't confirm or deny, but they've been liquidating other positions as well.
Yeah, look at crypto when we had this big run. Like they were definitely, so just to kind of clarify what that is in my mind is, so two ways to force someone to cover their short position. One is if the stock itself rises so high that they don't have enough liquidity to keep the short open. The
Yeah, pure
other
price
is
action
Right. The other is if their liquidity drops so low, they don't have enough liquidity to cover the price action.
to
Right.
sustain it.
So one catalyst for AMC popping off might be, the market drops 20-30%. Now all these short positions, the short entities, their total liquidity is down like 10 or 15%, whatever it is. So now their margin requirement isn't being met for that short because it's
Yeah,
based on their liquidity.
and their
So
assets get liquidated, forced to cover.
yeah, but that's like 5 days down the road, and it seems like they can kick. So BlackRock, that's when retail was winning in January. But we hit them by surprise, man. They had no idea. They lost so much money. It was beautiful. Here's where I differ. I think that they're smart. I think that they're not going to get caught in the same mistake twice. They're going to figure out how to trade around it, right? And now they're going to play both sides. So I think since January, they intentionally drove the stock price down, selling calls, trying to make a little bit of money back on that terrible position they took initially. Now, as that stock starts ripping, right, they're switching long to force that rip, and then they did the same thing again. And that's that perpetual gamma squeeze. And what I'm hoping for is what you're saying is that it triggers this mothers of all squeezes, forced liquidation of all shorts, right? And then we see absurd numbers. But uh, I'd be pretty okay if the stock ran to 900 just, off perpetual gamma squeezes. It, like that would make me very happy. Uh, and then I think as it does that, the chances of a forced liquidation becomes much higher. But what I really see is that every level will bring in new shorts, and every dip will bring in new bulls. So as we went from 27 down to 8, we picked up a heck of a lot of buyers who were like, "Hey, this thing was just $27 like not that long ago. We should get in," you know. And they went long, and then the stock ripped. And as it hit 77, people were like, "Wow, this thing should not be $77," and they start shorting it. And the methods to that are shady, and that's the how. But the why is it comes down to the money. And I'm telling you, like, you could make, 10,000% return on your investments if you're trading options or selling calls in a corrective pattern, or going long in a motive wave. And that Citadel owns most of the options market. So they create their own portfolio, and I think that they use their riskless principal trades to kind of force the options market into play. And that's just me being a cynic. That's my 2 cents. But again, I think we're saying the exact same thing, is that if we see a major sell-off in the market, it'll force the stock price higher. And if the stock price rises extraordinarily high, it'll force the entire market lower.
Yeah. Well, let's go on to the earnings call. JP, were you listening in? What are your takeaways from the call, brother, if you were?
Oh man, I was listening to the whole thing. I It was about 10,000% better than I was hoping for. I was a little nervous, I'll be honest. So I did take some call options today. I like to get trades on the house, so I bought when Ivy was a little bit low. I bought some $39 calls, and I sold enough to keep a few on the house just in case we had a nice big rip. But I was too afraid to buy long in the options chain because it expires, right? I didn't want to go long before earnings unless it was on the house. So luckily, I got some on the house. Those would be beautiful, but yeah, that went so much better than I ever could have imagined, man. Adam Aaron is truly, truly a good CEO. Uh, and I don't know if you guys heard it, but that man was just so happy through the whole earnings call. I could hear it in his voice. He was just so happy to be a part of this, just like I am. And I think just like most of the apes are, besides on, the horribly red days where the whole world feels like it's burning because, hey, that shouldn't happen. There shouldn't be that much power in any entity's hand. I just created a trading thesis that accepted it. I didn't even realize that That when I was learning how to trade, right, we didn't have apes to tell us, hey, this is wrong. I was just like, wow, it seems like they have a lot of power. I should stay away from that.
Yeah, you
Uh,
just follow the big money.
exactly. And then now that we have all these apes that are actually pandering for this, that's my biggest hope is that AMC actually creates the change, or GameStop rather, actually all of the short squeeze stocks create that change to level the playing field. And I do have high hopes for Gary Gensler, but back to Adam Aaron. He started the earnings call by saying, in short, we crushed quarter two, or something of the sort. I quoted it, and I think that kind of surmises the entire confidence level he exuded through the whole interview. Even when he was hit with a couple like off kilter questions, or rather had to stem into the inevitable shutdowns that we're going to see, he did a wonderful job. He addressed the concern and then said, "Don't worry about it. Got this," right? He turned it around perfectly. And at every point of doubt, he just brought pure confidence to investors. I think institutional investors will continue to buy long in AMC through tomorrow. I think that that alone was the catalyst I needed to see a massive move up. I couldn't have been happier. What'd you think, man?
Oh, I think so many people are going to FOMO in tomorrow morning pre-market. The biggest takeaway was them accepting Bitcoin as payment. I think when Tesla announced that, I think it was like earlier this year, the stock went up immediately. And so, I'm a big fan of crypto. I think crypto is the future. I'm actually on the team of a new coin. We're developing it right now. And so whenever a company switches over, like when Visa talks about it or Square, their stock automatically goes up because there are so many people that know it is going to overpower the US dollar. The US dollar is going to go to being literally worth nothing, and it's just going to be digital currency in the future. That's what I speculate. So just the
Yeah.
fact that they talked about accepting it as payment by the year's end was huge. And then they also alluded to using crypto in other ways. So that's yet to be seen. The other thing that was awesome was they talked about a potential working together with GameStop. We'll see if anything happens about that. Warner Brothers Films, they're going to have a 45-day exclusive theatrical release window. That just means more money for AMC because they're going to the theaters first, and then it'll be released to the streaming services after 45 days. And then they're getting 22 new AMC theaters. Two of those are in LA. I've been to those malls. They're very nice high-end malls. People have money that go there, so it's going to be a lot of revenue. And then he obviously asked or answered Timothy's question about the dividend, but he said basically the earliest they can pay it would be a year from now, which it makes total sense. You can't really be dishing out dividends if you're not in the green. So it was awesome, and there's going to be so much FOMO tomorrow. I'd be surprised if we don't land over $40 on the day. That's what I took from it, brother.
Yeah.
But JP, would you like to share your screen for some technical analysis, and then we can open it up for some question and answers from the viewers?
That's so funny. I thought I was sharing it the whole time, man. Again, not very good at the technologically stuff.
Oh, you might be on your YouTube stream. You might be, yeah.
So I am disabled from sharing on the Zoom call.
Oh, I'll get you right now. Let's see.
Yeah. So I was stemming so far into my TA, and I had assumed we're on the same page. I apologize, man. This is the first time. Thank you so much for having me on. And again, I can't say how nice it is to have your work out there, man. You're so real that people respond to whatever you say because it's sentimental. There's no bullshit. And again, that's the same thing in all of the hip hop or being rap videos I saw that you put out. Keep it up, man.
Hey, thank you so much, brother. I appreciate that. I can't be anything other than real, man. I can't even tell a lie. You should be good to go to share your screen. Sorry, I didn't have that on initially.
Okay.
Go ahead.
So where are we? Essentially, I'm in a 4-hour chart here. It's a log scale. I drew a couple beautiful, nice bullish trend lines, and this is the one I thought we'd bounce off of. So I did make a nice prediction here on this drop, and then a nice big rise through Tuesday, which happened. I thought this would actually I'm not even going to get into Elliott wave theory, but essentially most corrections are ABC. I thought this would be our wave one up. What we saw was an E down to the blue trend line, which is the one we took off of before. So when I talk about technicals, and specifically what they're trying to do is they're trying to force the implied volatility down. So as they short from, say, 27 or 23 down to $8, the call prices get so low that there's going to be a gamma squeeze up. And that's the same thing, just to keep it super simple, that I'm seeing here. So they shorted it from 77 down to 29. And we hit that same blue trend line, which held from $2 all the way up. And we started to see immediate upside. It's really funny how news cycles line up to technicals. I did a whole post on it. I think everything's bought. I think that everything is bought, like all of the news. COVID narratives on
Oh
every
yeah.
micro level. The whole world is just paid for. It's kind of sad. So again,
Yeah.
refreshing to see someone so real. Um, but yeah, for this week, I'll get into my numbers a little bit. Essentially, I think that we have 2 to 3 weeks of pure bullishness. There's going to be volatility, obviously, but it should be upside, and I think that it ends around 88. 88 and then corrects back down to about 70, and then we could see upside for up. I mean, I have us at 120, but we could see upside much higher than that. That's the beauty of these gamma squeezes, uh, is that they're kind of fueled by the options chain. So if the options
Yeah.
chain has $140 strike, we could very easily see it run to 140. Um, and it's going to have a $140 strike if we break 50 again. So this big, thick red trend line is essentially the ultimate bearish trading thesis right now. Every time that it touches this thing, people want to short the stock. This green trend line is the second best bullish, and what we saw was that massive push up. I mean, that's a 33% gain from 30 to 45, and that happened in 2 days, right? And now, same thing. This blue one is the ultimate bullish trend line. So essentially, every time it hits this, buyers want to come in. So when I talk about the seller side of the market, I mean, hey, it's sitting at a resistance. Hey, it's sitting at a bearish trend line. Hey, it's a head and shoulders. So like right here, we had a head and shoulders, and then we triple topped 60, and then we plummeted. But what we did was we plummeted into the buyer side of the market, and as you can see, buyers came out to play. Um, and then it kind of broke our support here, which I wasn't expecting. But obviously, nothing's set stone, and that's the beauty of Elliott wave theory is it allows you room to play. So essentially, it changed into an ABCDE correction, and I had two support zones. Luckily, I don't think the 25 is on the table anymore after today's earnings. Um, and I'm seeing us up to mid 40s tomorrow, and then probably around a $40 close. And then, so these are all, I have to see wave one. It's a little messy in here, but we should see some volatility. And then where these two trading theses, remember the ultimate and the non-ultimate bullish and bearish trading thesis kind of hit each other. I circled that. If we break through here, we're gonna force all of anyone who shorted the stock on this thesis will have to buy to close their short, if that makes sense. So when I'm looking to short something or when I'm looking to go long, I look for a reason, a trading thesis. It might be a support, it might be a fib level, it might be a trend line, it might be a mismatch in option pricing. But I'm looking for a thesis. This is the strongest bearish thesis there is this thick red line that I drew. And the green one, as we break back into it, will become our strongest bullish trading thesis. So that kind of happens real soon. It happens on 8/12 actually. I'm sorry, it happens on 8/13, Monday 8/13 or Friday. So
Hmm.
for this Friday, essentially, I think that'll be the end of wave one, probably around 50, and then a push down to 40s again, and then massive, because it'll pick up buyers, if that makes sense. It'll lower the implied volatility, pick up buyers, hit these micro trend lines, which I drew thinner because they're less important, but they're still theses. It's still a reason to buy or a reason to sell. So it'll hit this micro trend line around here, and then I think we just see all hell break loose up to 80s, and then our fifth wave is dependent on the third for the most part. So I can't really get an estimate on that. But yeah, and then I think the same thing happens again. I think we'll see a nice big correction, and essentially another gamma squeeze up. The only reason I don't think that'll happen is if there needs to be two things. One, there needs to be fundamental traders who will always short it. That's always going to be the case. Don't worry about that. The second is important. We need apes to, number one, buy the stock, right? And number two, they can't sell it. So the problem with that though is as the stock rises from 35 to 100, those two conditions are very easy to fulfill, and it actually becomes easier and easier to fulfill them because of FOMO. But as the stock hits, say, 200, 300, $400 or whatever it gets up to, it becomes harder to buy the stock. It takes more money, and
Yeah.
and more people are gonna want to sell. um, so that's essentially the conditions I see necessary for the perpetual gamma squeeze. But apes are tenacious. I don't see them selling. Like
No.
I really don't. I think that a lot of the apes will just hold this stock out of the integrity of, or out of rather the lack of integrity in the market, because it makes a difference to hold this stock. So yeah, those are my technicals for the week. Essentially, I think that we'll push up to 45, down to 40, and then on Friday, I think Monday, Tuesday, Wednesday will be really good. But then I think that there's going to be too many people buying weekly calls, so it's too lucrative for someone not to force the stock price down on Friday to make those expire worthless, because apes don't really understand calls, is what I'm realizing, and so I turned my DMs off. People were asking me if they should buy like $100 calls expiring in a few days, and I was like, no, please don't. Um, and they're like, no, I saw it on a flow feed, and I'm like, well, that's a bearish call. Like someone sold to open that position. And the reason I say that is it's so far out of the money, no large institution would do that, but yeah, essentially, I think that we'll see probably high 40s this Tuesday, Wednesday, and then a slight correction into Friday. And what I'm hoping for is a gamma squeeze Friday, is that we actually break the market maker's expected move to the upside Friday. If we don't, it's almost inevitable that we'll come back down to the 40 range and then just fly through it on next Monday, Tuesday, Wednesday. Which should bring us to all-time highs. So I'm seeing all-time highs not this week, but the following week. And then it continues probably for another week after that. We usually will get about 2 to 3 weeks of the pure bullishness, and then it'll start its correction. Uh, and how far it goes is completely unknown to me, because I do need to see wave one. So let's say, for instance, tomorrow we break into the 60 range, right? Now my wave three is going to be way higher. It'll be like 130, 140, and my
Uh-huh.
wave five will also be way higher. So I do need to see the completion of one, but this is kind of a general gist of how I think the stock will move. I think that Tuesday and Wednesday, it'll just be bullish madness. And then I think we'll see profit taking by institutions and institutions shorting who sold calls for a slight sell off into Thursday. And then Friday, I think that there's a huge potential for a gamma squeeze, meaning that we would actually just break the market maker's expected move, which Tesla is notorious for. Oh man, that's a mess. So yeah, like I said, I've been trading Tesla for quite some time. Um, but essentially, if you look at the dates here, if you look here, this is the 25th. So 23rd is 23rd, 24th, 25th. That's a Friday, so it goes into the 28th. So this is a gamma squeeze, and this happened at $50. So essentially, they broke the market maker's expected move by an absurd amount. They went from 59 to a 67 close. And what you'll see is it actually triggered this upside potential. So I think that's what I'm kind of getting with AMC here.
Yeah.
Is I don't think that five. If we're being honest, I think five happens later on. I think that we'll see more of a three and then a slower gamma squeeze up for 4, which will be kind of like a sell off at the end of it, but it'll be at very high stock prices, and then 5. Um, and that would line up in November with that timing. And the reason I say that is just because I think that there's too much money to be made on the stock on both sides of the trade. So as we hit that 77 level, it's going to be a fight. It's going to be a fight between the bulls and the bears because people will want to start shorting again. But at the
I
same
don't know
time,
who would short this stock.
well, let's be realistic. If you shorted at 72, you made a hell of a lot of money.
I know, but who could have timed that unless you were a market maker? Like,
So I would have shorted at this point right here. If it wasn't AMC when we triple topped at B, I actually this was like my very beginning Twitter days. I made a post about it. I was like, oh fuck. Essentially, I'm sorry. Excuse my language. I know this is on YouTube. I apologize.
oh, you're good, brother.
So essentially, we triple topped 60s. It's a head and shoulders. I kind of knew we were going to go down at this point. I dipped my feet back in at 40 though. I went long here. I dipped my toes in, and then I got bit a little bit. So I waited again, and then I dipped at 31. I put my feet in pretty hard at 31. I spent a lot of money there. I was very upset that we sold back down to 28. But again, I'm only upset for today. Tomorrow, I won't feel upset. Um, right. So essentially, though, I went massively long a couple days ago, and then today again at the earnings call. So I wonder what we closed at.
35 something.
Oh yeah. So I went long at 35. 35 was the number I liked. I liked the number a lot. Plus, I listen to a lot of conference calls. I track earnings pretty diligently with all these stocks because, uh, for instance, I just made an absurd amount of money on Tesla. Um, I made a post about it. I said they're going to dip on earnings and it's going to create too much put froth and then they're going to gamma squeeze higher. So I actually bought the day after earnings at 628 and I've been holding a call and we just rose up to 730. Um,
So JP, so to summarize your trading style, it's all revolved around options and EWT, Elliott wave theory. Am I right?
Yeah, for the most part, I like to think I just look at the forest. So I try to see all the bearish trading theses I can, because again, I've shorted Tesla a lot. I've made just as much money shorting Tesla as I have going long. I've never shorted AMC because AMC is much different to me than Tesla. AMC is kind of a movement, and my hope is to level the playing field. Uh, and Tesla's kind of just a money machine to me. So I'll look at Tesla a lot differently than I look at AMC. But essentially, yeah, I like Elliott wave theory, and then I like looking at large fractals to kind of gauge where I am in the Elliott wave theory. Um, and then, so yeah, this is my GameStop chart actually. It's kind of messy, but I think you'll like it. Essentially, I didn't touch GameStop for a long time here. Uh, I kind of had us coming down here for C, and then I have us pivoting at 200, and I think it'll probably be truncated down to 150 again, and then I think that's the E. So if we're being more precise, I think GameStop, I made a post about it today. I think it has room to run to 200. And then I think that we'll see a correction down in GameStop just because that's what my wave count needs. And the reason for this is that GameStop completed a cycle, whereas AMC completed a primary, 4 out of 5 primaries. So GameStop needed a bigger correction. But then I see GameStop. I think GameStop will have an unbelievable year going into next year. Unbelievable.
Oh yeah.
Absolutely will be where I put a lot of money. Um, and I actually picked up some GameStop today when I made that post because it pivoted in my expected zone. I drew this a couple weeks ago. And I have two. I always, I try to be realistic. Like I'm not, an omniscient being. No, and I'm not from the future, regardless of what I might say when I'm on my high horse. But But yeah, essentially I looked at the fib ratios. So it's sitting at the 23% retrace. I look at my Elliott wave theory. I have us in 5 here of a cycle. So I did need one more push down. And depending how far up we go will kind of determine how far down it goes. So this blue line is just highly confusing. I shouldn't have it in there. Uh, I think it'll kind of be like this or down to here, but I think that will hit this pivot eventually would be our 130 to 160 after we touch 220, and then I think it just takes off. Same concept. They're crushing the implied volatility to create a perfect arbitrage opportunity in the options chain. As soon as they go long in the options chain, creates a little gamma squeeze, and that itself squeezes all the entities who have been shorting it since $500. So now they're all going to be hitting stop losses. So if you take a profitable trade, you should always put a stop loss in so it doesn't go red. So as it hits key resistances and breaks through them, that's why we impulse up. It's shorts, right? So as we hit this D, it'll have two options. This is a major resistance, and it's sitting on a trend line, right? So as we hit this D, it can either force all the shorts to squeeze the stock higher by closing their positions, or they can kind of double down and it'll force the bears to sell, the bulls to sell. So essentially, that's what I'm looking at is where the trading thesis shake hands. And when they shake hands, I kind of have to gauge from other metrics who's going to win. Who's got a firmer handshake? Is it the Bears or the Bulls?
Oh,
But
dear
yeah,
Lord, it's the bulls on both GME and AMC.
oh yeah, absolutely. Zoom out and look at these charts. It's not even a question, guys. That's the big picture. Look at these charts. There's different trading theses on all these different levels. Look at AMC, guys. It went from $2 to 72. And sure, it's sitting at $30, but this year, within a year, it was $2.
Oh, yeah,
The
it's
Bulls are
insane.
winning. I assure you of that. It's just we lost a little bit of a battle, and that's what a correction is. It's a move against the main trend. And with these short squeeze stocks, when you move against the main trend, it forces an explosive reaction, which is, the move from $8 to 72. That's explosive. And that's because they forced against the main trend, and the main trend is so hard that all these buyers came in and it trapped anyone who shorted it. They had to short so many shares to get the stock price to go down that essentially they had to buy to close all of those. So what did we see happen? As soon as we broke the 17 level right here, or the 14 level at 1654, it got crazy, right? Look at the volume bars. That's not bullish. That's not completely bullish. That's a combination of FOMO and the bears who shorted from 27 or 20 down to 16, right? Or 8. They're closing their position. This is them stop lossing, and it's prisoner theory, guys. Because shorts have infinite loss, they have to close out as quick as they can. So as they start to close, boom, bulls are buying, FOMO's hitting, they're all closing at the same time, and the stock is getting eaten up by everybody. So it actually catches anyone who can't get out of their position, and it squeezes the stocks to all-time highs, is my consensus on what a squeeze is. Um, and that's the same thing that I anticipate should happen this week or this and next week in AMC, is that we'll hit that same thing, right? We're going to hit these levels that force all of these bears to start closing their positions. So now we have twice the buying pressure, plus it's literally a bloodbath because the bears know if the bears start closing, it's not like, hey buddy, we're both bears. It's like, no, get out of here as soon as possible, because if you don't, you're going to be bag holding a hell of a loss. And that's why the stock kind of moves in these massive impulse waves, is that it takes so much pressure to short it down because there's so many apes buying and holding that there's like millions and millions and millions and millions of short shares that need to be bought back. So as we hit through these resistances and validate the bearish trading theses, they're going to profit take or lose money or cover, whatever you want to look at it. And then the stock, as they do that, is going to FOMO. And it's the prisoner theory, so they're going to be essentially trying to rat each other out to get out of jail.
Hey,
That's
JP,
a lot of words.
you want to open it up for some Q&A, or you want to talk about some more TA?
No, man, I feel like I've talked way too much. I kind of want to hear you talk a little bit. What do you see happening, my man? I see your videos. I know you know your stuff. You're giving me a lot of credit here, but no, I know you know your stuff, man. I see it all the time, whether it's your share counts, whether it's your price predictions. You do pretty good, even if you don't consider yourself a TA guy. You're definitely getting there, and your DD is on point.
No, I am a TA guy. Like that's how I started. Me and you have a similar background. I started out with just options, and I had to pay my tuition, and I learned the deal. You're probably better than I am, but that's how I started out. And I made a lot of money on the June 18th 40 calls. I bought them when they were 39 bucks each. I sold them for thousands of dollars a piece way back when, a couple months ago. And so what I see with AMC is I look at it from a psychological perspective. It's the working class versus a bunch of billionaires that have never lost a day in their life. And so they're going to go out kicking and screaming. And that's what we are seeing right now. But these regulations are so integral to this whole thing playing out. And I believe in them strongly. I believe in Gary Gensler. I believe in Gerbera Grual. I believe in Elizabeth Warren, I believe is her name, from the House committee. I believe in these individuals that are changing the laws. And because we spoke up, like you said, we were loud enough. And once these rules are in place, and some of them are literally called the wind down rule. What do you think they're winding down from? They're winding down from the biggest wealth transfer in history. And everybody knows it's going to happen. Like this is not some surprise. When you short a stock, minimum like 2 times over, up to 10 times over the entire float, well,
Mm-hmm.
you have to buy those back eventually. And so when you buy back, even if you bought back 2 times the float, let's say there's 1 billion shorts on AMC, that would send the share price to astronomical numbers, and it would make it a name your price scenario for the people going long. You could literally name your price, and the DTCC trading computers would have to buy it back. Why? Because it's not humans buying it back. It's a trading system that is liquidating somebody's longs, so they have to cover their shorts. And so I see it from like a more macroscopic view. I just hold until like my portfolio is just stupid dumb, and I'm just like wealthier than shit. Like that's how I play it, you know. And
Yeah.
I understand people play it on a smaller scale, and that's cool. And nobody really knows what's going to happen. Like you said, I think there's this big misconception with people like you or people like me that have like followers on the internet. It's like we don't know what is going to happen. We only try and guess based off of what we are shown. Okay. So it's just playing with probability the best that you can. So, like, when people ask me what's my price target, what's my prediction? Well, I can give you like an idea of where I think it's going to go. But at the end of the day, I really don't have a clue. And so what I do is I just hold my shares, and I play a little bit of call options too, but like I know how to do it, and I'm not playing weeklies. I'm playing them far out. And
Don't play weeklies, guys. Don't do it. It's risky.
yeah, no, I mean, people can do whatever they want at the end of the day, and they're gonna do whatever they want, right?
Of
But
course.
I just see this going to very high numbers because there are so many shorts. And then when you combine that with so many people holding to life-changing money, I mean, think about it, JP. These are people that have broke their back for years, and they will do anything to get out of the 9 to 5, the rat race, you know? So I think the people going long on AMC are going to be very happy, whether it's this month or 6 months from now. I don't know, but I got time because I don't pay interest and I'm on a cash account. So that's how I see it, brother. Do you want to take a Q&A, a couple questions real quick?
Absolutely, man. It's running late. I did want to respond to that because that's the biggest thing I don't like is people telling someone what to do, and you just nailed it, man. You shouldn't ever listen to someone when they're telling you what to do with your money. If you want to sell the stock, guys. Just don't go out and publicly, bash AMC and like and like disclose that you sold it. But hey, it's your money, and if you're comfortable with your gain, then take your money out and continue to support the cause. That's the beauty of this is that everyone needs to find their own risk appetite. and whether that's $100,000 a share or $100 a share, that's up to you. There is no right or wrong answer, and no one knows what's going to happen. Jackson nailed it. If we do see forced liquidations and the DTC takes over, he's right, man. You can kind of name your price. And that's the beauty of this whole thing, and that's what I was kind of hinting at when I was saying that I think in order to get that DTC to start covering, we need to see higher prices. Once we're in the $200-$300 range, it becomes much more likely that that takes over rather than the 72. Or like to stem back into the beginning, what we were talking about, if the whole market were to take this massive sell-off, that would kind of do the same thing. So yeah, let's definitely open it up to questions and answers. And yeah, man.
Awesome.
I actually do remember now seeing a while back you posted something on calls right around the time I first got into Twitter. And I remember seeing your response. Someone's like, dude, you just made me enough money to retire. And you're like, no, I didn't. I'm not a financial advisor.
No, people have messaged me a lot and said like, yo, you've like helped me make money in a good amount of money. But like, that was not me doing it. I did not hit the buy button. I didn't hit the sell button. All I said was, this is the call that I like. And this was a long time ago. And so I'm not doing anything for anybody. Like, if anything, I'm just like a stock therapist. But there's 1,200 people in here right now. So thank you guys so much for watching. Please hit the like button. Please subscribe if you haven't. And also, more than subscribing to me, subscribe to JP Merks. His link is in my description. Hopefully we'll get you some more subs here tonight, JP. And here we'll answer a couple questions before we get off. Try and direct them towards JP because you guys hear me talk too much. Let's see.
Yeah, so to my 87 watchers, same thing. Subscribe to Jackson's channel. It's in my description.
Oh, I appreciate that, man. Let's see. Okay, I saw a good one back here. Oh, here we go. AJ Cook, quadruple seven says, JP, can you explain how you are able to see the whales switching from bear to bull or vice versa?
Yeah, I absolutely can. I use Unusual Whales's premium stuff, and I also use Thinkorswim's option chain. That's not a recommendation to go buy Unusual Whales's feed. He's been in my space calls. I actually got him to speak once, and he said the same thing. That's one of the reasons I don't have a promo code with him, is that I don't want people blindly buying something. His free stuff alone is amazing, and you kind of need to know how to understand the data to be able to interpret it. So for instance, a lot of it won't tell you if it was bought to open or sold to open. And that's kind of, to put it in other words, you could short a call, which is, selling to open the call. It's a bearish position. You don't want to buy to open a massive call that was sold to open, if that makes sense. So look into Unusual Whale's free stuff, and look into the Thinkorswim's options chain. I made a post a while back when GameStop had a very, very nice run. Jackson, I think you may have saw it. I made a post about its put to call ratio. It was the most absurd put to call ratio I'd ever seen in my entire life. So on Fridays, or on Thursdays, I like to look at the weekly option chain. So if you're looking at my screen, you would go to the trade tab and then scroll all the way down to the bottom in Thinkorswim, and then you can select what series you want to see. So if we're only looking at, this week's series, then you'll only see the open interest or whatever value you choose for that. So essentially there's a heck of a lot of 50, big puts sold at the $50 range. So I think that Friday would be very hard to break above 50. But when I'm looking at this to me, there's hundreds, 80,000. No, I'm sorry. Let's rephrase. Probably 50,000 puts that are under $40. So someone sold to open those. That's the put skew. So think of it from the opposite perspective. If you didn't buy a put, you sold to open it. How do you make money? Well, that put expires worthless. How does that expire worthless? You drive the stock price over $40. And then for the following week, which is the monthly, the important one, it has the most volume. We have 263,000 puts, 277,000 calls. Jackson, I apologize. I know I'm not sharing on your screen. anymore. Let me
No, that was me, man. I took it down.
I just realized it. So yeah, trade tab, Thinkorswim, go to the trade tab, scroll all the way down at the bottom of it. You'll see product depth. You can look at the options chain. You can filter through what you want to see. Look for the open interest. Look how many puts there are. The average put to call ratio is 0.7. GameStop's was like 3 at one point. And I was like, hey, like this is gonna reverse really hard, and you know, it had like a 40% rise, or 30% rise of like a week later, uh, and that's just because the options market. It was a while ago. The options market itself couldn't. It just made too much sense. There's too much money to be made by driving the stock price up. So that's what I'm looking at in the options chain. If that kind of answers it a little bit, and then Unusual Whales's stuff. He's adding more and more features. I'm actually working with him on a few that I personally want. And he's so accommodating. He's just the man. So I think we should see those soon, which will be wonderful.
That's awesome, man. Hey, Daz, thank you for the super chat. He says, thanks, guys. You guys don't need to super chat me whatsoever, but I do appreciate it. This is from Philip. Love both you guys. Please do more collabs like this. Can you comment more on the November Elliott Wave theory / play, assuming your targets in August and September hit? JP, you want to speak on that?
Yeah, absolutely, man. You can only do so much with the data you have. For me to sit in here and to delve into a November thesis seems out of my comfort zone. Essentially, this next 2 weeks, my thesis for where we're going to go will get much, much stronger as I see this rise up, or rather, let's be realistic. Nothing says that we have to rise up, right? Like look at them. They shorted the stock from 77 down to 28. Like they have a lot of power. If it's more lucrative, this is my thesis. If it's more lucrative for them to short the stock, they will. And if it's more lucrative to go long, and this means long on, and short on every level, whether it's derivative chains, bond market, stock market, everything, right? Like it just comes down to the money. So my take right now is it's more lucrative for them to go long. So it also lines up with this massive earnings slap plus the FTD cycle. So as this week progresses, if it's bullish, I'll get more accurate predictions on what I think plays out. But I do need to see one push up before I could give anything on that. That was just speculation because I didn't see the 28 push coming, so I think that'll extend to the wave 4 is my general answer. If we had just bounced off 31 like I initially predicted, and continued to rise up rather than drop from 45, I think it all would have been in August, and then a pushback maybe like it's usually about 3 months is the corrective cycles, and then about 3 weeks of the bullish cycle. So that's as detailed as I can give you. I'm sorry, my man.
No, that's perfect. Voss Boss, I'll answer this one. Who do they pay interest to since they're market makers? Do they not pay interest on short positions to themselves, giving money from right hand to left? I hope not. Just a thought from a smooth brain. Voss Boss, great question. They pay interest to whoever lended the shares to them. That could be a retail shareholder. That could be a number of different people. But no, they don't pay interest to themselves. But it is a good question, and I know why you asked that as well. Let's see. Any more questions? Let's see. From Hunter Tidwell. JP, how do you decide between day trades or swing trades? What's your strategy difference?
All right, so that's a great question. So that comes down to the fractals of charts. If something's oversold on a 30-minute chart and the IV's low on a 30-minute chart, I kind of want to get into a scalp. If something's oversold on a day chart or on a 4-hour chart, then it's a much longer play. I want to get into a swing. So it really depends. I'm always looking, if I'm going long on a call, I always want low IV, number one, oversold on a relative strength, number two. I actually have a video of a scan query that I really like that pulls up exactly that. Stocks on any fractal you want to see. So if you want to see stocks on you can modify it to whatever you want. If you put in 30 minutes, it'll look at a 30-minute chart. It'll look at all the stocks that have options. It'll look at a 30-minute chart of them. And if they're oversold on the relative strength, and if they have low implied volatility, it'll actually pop it up for you. And then you can do your own technical analysis, kind of gauge whether you think that this support will hold, or hey, I should wait a little bit. That's where my Elliott wave comes in very helpful. So I have a scan query that helps me pick up those feeds, and then I use that a lot in conjunction with my Elliott wave theory. And then for a third confirmation bias, because I don't like losing money, and I really don't like unforced errors, so I try to get as many confirmation biases as I can. So for my third one, I usually look to Unusual Whales' feed and see if there's any overlap. If yes to all three, meaning it's oversold on implied volatility percentile, relative strength, and it pops up on an Unusual Whales feed, and it's structured well within an Elliott wave theory correction, then I'll scalp it on a 30-minute. If it's a 4-hour or a day chart, which is a different scan query, I have two set up, then I'm looking for more of a swing trade. Scalps are best early morning. So you wait for that, initial sell off, that profit take, then you wait for the bull trap, the ABC, and then you wait for your C. So it's like, this is kind of how I think about it, to remember real quick. It's like, shit, a correction. Then like B for bull trap, and then like C for ching. Right, right. I made that up. It's not great, but it's fine. So yeah, so I'm always looking for a three-wave correction in the morning on something that gaps up. Today, for instance, I made quite a few 100% on Fastly when they had their nice little run today. It had a simple ABC correction in the morning, went down to 40 or something, and then back up to 44 by the end of the day.
Awesome. Hey, thank you so much, JP. I think this about concludes it, man. Thank you to everybody watching and joining in. The ape community is truly beautiful, and I just want to say it's so refreshing to see a community of individuals that want to see people better their life. That's the bottom line. That's everybody is so supportive, and I hold AMC and I also hold GME, and a lot of the times I just want to speak on this really quickly. I see this like battle between AMC holders and GME holders. Like today on Superstonk, people were like talking trash that AMC even brought up GameStop, and there was some type of like elitist perspective. It's like, dude, at the end of the day, we're all the 99%. I mean, unless you're like a multimillionaire, whatever, but we're all the 99%. We're all trying to make a better life. Like, so if you're talking badly about a stock, you're not only hurting, you're hurting the same people that you're on the same side of the people you're hurting, is what I'm trying to say. So I love all you apes watching out here. And JP, we can do this again whenever you want, brother. You're a beautiful soul.
Yeah.
And thank you so much for educating people. And do you have any parting words, JP?
Yeah, it's actually for your audience. So personally, I don't know if you guys have heard Jackson's music, but like I said, man, there's no pandering in it. There's no bullshit. It's not like stadium country or rap that just says like fancy words. It's from the heart. It's real. It's raw. I don't know how you guys feel, but Jackson, man, I think it would be super super cool if you made like an intro and exit music to your actual YouTube, which it would kind of play really well into your whole thing, man. I think it's beautiful, and I think your music isn't getting enough of a spotlight. If you guys haven't heard it, it's real. It's good too. And then just to stem on that whole BlackBerry, GameStop, AMC thing, it makes sense, man. Everyone's afraid that we're going to dilute the power, but here's the
Yeah.
reality of the situation. If they're short AMC, they're short GameStop. If AMC runs, GameStop will run. If GameStop runs, AMC will run. GameStop is inevitably the parent. AMC is like the prodigal son or firstborn or daughter or whatever. And
Yeah.
then you have like the rest of
BlackBerry's
these,
the ugly stepsister or something.
whatever it is, they're all part of the same family. Success in the family is success in the family. The whole family will rise.
Yeah. No, I agree with you, brother. Well, hey, thank you so much for your time, man. You are a beautiful soul, brilliant mind. Guys, subscribe to JP's channel. And with that, I am out. Thank you so much for watching.
Thanks, Jackson.
Peace.
Oh, so I have a few people in my chat. Let's see. Any questions? Do I wear makeup? Nah, man. How do you develop a strategy with rules? So I actually posted a really a strategy in my entire stream. You can kind of see it. So A is going to be your key, wait for a gap up. B is going to be A is your first move against the correction. B is the bull trap, which is 50 to 85.6% of A, and then C is 1 times the length of A. So just draw a trend line to keep it simple from the end of the high to the low of A. And then if it pivots at B, which is the 50 to the 86% retrace, draw B there where you think it's going to be at 68.6, and then put that trend line on the 68.6 line, and that'll give you 1 times the length of A from B. So that'll be, where your expected C will be. That's probably the bread and butter to my trading. It works on every fractal. So if you look, let's just take a look real quick. So we'll just do AMC's day chart real quick. So essentially, if I take a high to a low here and I activate that, that's kind of so it's a log chart, so it's going to change sizes just because it fits the data, but it'll still be the same. So this is the A, right? That's the length of A, and then if I draw that from from B, which is the bull trap, that'll give you an expected C range. So for this one, it was actually from 72 down, and then if I grab this trend line right, and I put it right here, lo and behold, that gave me my 31 pivot. And then I'll show you on SPY real quick on a week chart just to prove it works on all fractals for you. So we see our A down, right? Ah, shit, a correction. And then our B is a retrace of A, so do your fib retracement if you need to. And then essentially so A, right, is your 100, your move down. Grab that trend line, move it at your B, and it's not a perfect thing, but that'll give you a buyer's zone where you want to start buying. If you find support there, go long. So that's on a weak chart in SPY, so this would have been quite a good move to play. Same thing though, it's literally on every single fractal. And then there's also 5-wave corrections, which are a different talk for a different day. Yeah, so no, I don't chart options. So I always have my options chart on the right. So I have a 2 chart set up. I only look at one for the most part. If I want to start trading, I'll go to the trade tab, and then I'll pick out whatever option I want, copy it, add it to a watch list on the over here. So I'll add it to a watch list, say boom, right? And now, hey, look, I got this SPY call down here, and then I'll go back to my charts and I'll copy paste it up here, and that'll essentially, it's a bad one because it's so in the money. Let me give you a better one. And then watch, you can link this to red. So this chart's linked to one red. So I'll link this one to red. And now if I click it, yeah, it'll pop right up and it's in a watch list for me. So I create my trades like that, and then I'll just pull SPY back up. So yeah, so if I'm looking at a 45-minute chart on SPY, and I look at the day's price action, this is how the option traded in regard to it. It started at 3.33, and we saw a push up, and then it got IV crushed towards the end of the day, and it closed at 3.27. But this is the only indicator I like on options is the implied or relative RVI, relative volatility index. So I like to sell options when they're in the high part here, and I like to buy them or in the low part. That needs to be in conjunction with my charting though. So I don't ever just chart an option. No, I chart the underlying, and then I use the relative volatility to kind of gauge where I want to sell. How do I pick strikes? 2 to 3 months out for a swing, .3 delta, and then I kind of just go with whatever I feel is going to make me the most money for scalps. So it's usually not that far out of the money. Yeah. No, I started about 3 years ago. My in GA. What's GA? Georgia. No, no, no. I'm in New York. All right. One more question. Go check my Twitter. I'll post out the 4 free links or sites that have free content that I liked. I've never paid for any education stuff. I paid by giving them my money in the market. Um, but I really liked their free stuff. Yeah, Tyrese, I actually had a space call scheduled with Bam, but he did back out on me, unfortunately. He's a very busy guy, which makes sense. Why no videos with Matt and Trey? I don't think Matt or Trey know I exist. Do I teach one-on-ones? No, man. I'm mostly trying to get an instructional series out. It's not something I would be opposed to, but I don't really want to charge people for anything. I just want to put out content that's of a high enough quality that you choose to watch my videos, and then in return I would get ad revenue. I don't really like the idea of actually selling something. Algo trading is most of the market. I've never used it because I am one that likes control and it scares me. Uh, but most of the market is algo trading. This is the watch list I was talking about. So this is on a 30-minute chart. It's going to show you stocks that are oversold in low IV percentile. So essentially, if you're looking at gold, it's definitely oversold, low IV percentile. And then it's saying if it's going up, down, or caution, which is flat. And as I'm looking at this chart, I need to use other sorts of technical analysis to see if I think this floor will hold. So if the floor holds here, right, it would be a great time to enter a call because you could capture some upside as it enters into a B. This is going to continue to go down. There's too many bag holders from 22 to 20. So it'll probably do something like this. But yeah, essentially this would pick me up a scalp, and then I would plan my trade around the scalp if I like the stock. But I mostly trade the same like 7 stocks. Yeah, so the put to call ratio is essentially how many puts were sold for that expiration and how many calls were sold for that expiration or expirations, and then it's just a ratio of how many in regard. The average stock has zero point 0.7 puts to every 1 call. So if there's 100 calls on average, you'll see 70 puts. With these stocks, we're seeing closer to a 1 ratio, which means that there's too much money in the put skew, which is the amount of premium that the put has, not enough in the call, so it's more lucrative for entities to start switching long to capture all that put premium. So they'll sell puts while the implied volatility on puts is really high, and then they'll buy in the money calls to force the stock price up, and actually go long on the stock to force the stock price up. And in turn, all of those puts, right, the one put ratio, will expire worthless, and then they'll keep all of their money from the puts they sold. Yeah, Dwayne. I think that this will go as long as apes keep buying and holding the stock because it has the potential to. I use Thinkorswim. All right. So I use quite a few different brokers. My Roth's and Fidelity. I had a Robinhood for a long time. I switched that to TD Ameritrade. I didn't really like TD Ameritrade, but I still use them. And I have a Webull, which I don't really use that often. And then, uh, yeah, those are the three that I have. Most of my trading's in my Fidelity account. I kind of just dick around in my Webull account. Yeah, yeah, man. I don't really use the indicators ever, but I like the scan query. The indicators just mess me up. That in response to Nick, same hot zones. Yep. I like the scan query. I don't like the indicators. So my charts are studyless. It's just me in the chart, and then if I need to find something to trade, which is very rare, I'll look at the scan query. Don't YOLO calls, bro. It's how you lose money. I've YOLO'd a lot of calls. But yeah, essentially, AVC is going to be my biggest thing I could probably teach someone. I use Elliott wave theory as a way to conceptualize other technical analysis and to gauge where I think the stock will go on a bigger picture, and then I use the other technical analysis to gauge the battle of the bulls and the bears on the intraday. So, intraday you could have a bearish day, but it's still very bullish that week, right? And that's just the bears winning a small battle, so that there's more bearish trading theses than there are bullish, or rather, there's more money being shorted than put long, so the stock will go down. You kind of have to be able to gauge uh, where they're going to meet and who's going to win. So if you're in a correct, if I'm trading something in a corrective pattern, I like to sell calls, and then if it's in an emotive wave, I like to go long on calls. All right. All right. On that note, I am gonna check out of here. Hey, thank you so much, especially to anyone who came over from Jackson. Please give him a subscription. My look on Sundial. I haven't traded Sundial. I don't trade pennies. I just have lost too much money trading pennies, so I don't personally trade them. Um, but yeah, man, it will squeeze if the rest of the meme stock squeeze, just like we saw here. It had 125% run. I don't like Pinterest just because I hate their website. It looks like crap. It looks like they tanked earnings, which in turn should actually lead to a nice push up. So I actually did have an. That's funny. I didn't draw this. I have actually charted Pinterest apparently. Um, so yeah, let's take a look. I could very easily see us going down to 46. So yeah, so as you see, we did pivot. So the expected pivot zone is 0.5 to 86.4%. And I like using this range though, so I like using this 68 to 78 range, and I always put my anticipated B at this range. That's why it's in blue, just to kind of and then the white's the acceptable, and then red's like, hey, we're going to go long. So if we enter into this range, it invalidates the B, right? And then you can anticipate that people will close the short positions, so you'll see actually upside. So that's where I get all my numbers from. Essentially, is like what would invalidate a trading thesis. So it's in an ABC correction, very likely. Now this is a major time frame. So now, not an ABC, right? I went way too far. So what I actually anticipate is a 5-move leg down. So 1, 2, 3, 4, 5. So instead of this one, it's wave 5 is usually 1 times the length of wave 1. So now my C would actually be here at 52. So yeah, let's see how that pans out. And then I think buyers start coming back in. So just under a double bottom should finish a 5-wave move down. And then I think we see massive upside because same thing, that put premium will just be too tasty. It's too lucrative for entities to go long if there's that much of a skew. Blackberry's looking good, man. I have Blackberry in my Roth. There you go. Yeah, I hated Pinterest, man. They always try to they always try to force me to turn my ad block off and make an account, and I can never look at anything I want to. So I don't like the stocks because of that, just because of the tastes on the experience. So yeah, BlackBerry I think could do a push to it could do a pretty high push, to be honest. So I think that this is one. So 1, 2, 3, 4, 5. 1, 2, 3 should be strong. 3 should bring us to probably there, back down. And obviously this is not a time representation. This won't happen tomorrow. But essentially 4, 5, 3, 4. And then we can, again, wave 1. So if this is 1, right, so just do the impulse of it. So where it impulse stops. So from here to here, I'm going to draw that line, and that's going to be my gauge for 5. So essentially I'll bring this one right over. And wherever 4 ends, that's where I would anticipate 5 would go. So yeah, we could see some nice big upside on BlackBerry. This would, be a couple week thing, though. It wouldn't be depicted like I have here. For what? BlackBerry? Dude, I gave you my entry range. $9. I like going long at $9 to $10. I like selling at $11 to $12 on the calls. That's where I'll sell to get on the house. So if I went long at 9 and it went up to 12, I could sell probably half, for 100% gain, and that will give me half free, completely on the house. And that's how I kind of like to trade. I like riskless trades. So I look for good entry opportunities and I cut my losses really quick. So if we broke below 9.7, I'm selling. I just don't. I would rather enter back down at the 764 level than hold through it and then hope it comes back up. So strict stop losses, and I take profits early, and that way I can get trades on the house. Yeah, no problem, man. I realize that might be the case. I apologize. I'm brand new to YouTubing. I don't mean to be so bad, but it's new. All right. I am going to cut out here, everyone. Thank you so much for stopping by. I will be putting in a lot more time into my YouTube channel, learning how to edit and all that fun stuff. I'm hoping to get out the start of my instructional series on how I trade options sometime later next week. Unfortunately, I'm leaving Wednesday to go camping for the weekend. And I came home early, I came home yesterday because I didn't want to miss today's opportunities. But I know from anecdotal experience, it'll be best if I leave on Wednesday and don't look at it. Goku, man, I don't trade pennies. I did go over Sundial. It's going to be very similar to the rest of the stocks to a lesser extent. If they all squeeze, Sundial will have a nice little pop. But because I don't trade pennies, I don't want to really get into the charting on it. I don't have a firm grasp of how pennies move because the price movement is so drastic, if that makes sense. All right, how do I end this? Thanks again. Hey, everyone, seriously, if you haven't subscribed to Jackson, definitely go do it. He's the man. He just helps me out a lot. I really appreciate him. And yeah, hopefully you like my stuff too. Should be pretty good, but I say that about everything I do, so who knows.